So, first of all, thank you for joining and welcome to this amazing stream we're going to have today. I've been trying to do this for a while, and I think the time that we have a little chat about Ichimoku is just here. So, it's a video that is definitely a long time coming, and it's something that I want to ensure I'm as clear as possible about. So, without further ado, as usual, sit back, relax, have a cup of coffee. Oh, you know what? I'm missing my cup of coffee. But anyway, let's chart together and see what's going on. So, if you've been here for years, for a while, or on Twitter, you know that at different points I've spoken very confidently about one thing being really important. Uh, from time to time, like I really get into, let's say, research sports, like what is risk to reward ratio, risk management, time cycles, different indicators. So I tend to fixate on these things at a particular point in time. And with that, sometimes it happens so that the confidence can outpace the nuance. So when that happens, for some, advice start to sound like rules. And if there is something that I want to tell you today, is that trading doesn't reward certainty. Actually, it punishes it. So this is basically a calibration because over time I realized something uncomfortable. Even when people say this is just technical advice, the way people speak, the way I speak, the way you guys speak, the way we frame things, which is shaped by our reality, can turn suggestions into doctrine before any of you even has a chance to research. And the problem with that is that people often react to the follower count as if it is the ultimate truth before context. And this is why I want to talk about this because very recently, last week, I had an interaction with a person that was very rude on Twitter. He was basically calling me out for not using the double settings. And at some point he said, like, you have no idea what you're talking about because carp.com and CryptoCred, they both use the double settings. So that's the right way to do it. So that's why I've been wanting to talk for a while about this. So, like I was saying, people react to the follower count as if it is the ultimate truth before the context, before caveat, before nuance. And I get it. If you see a confident claim from someone you trust, your brain fills in the rest. And honestly, that's not the audience being lazy. That's how authority works. And we all need to be more aware of that. So, this is a wake up call to some of you who have been here for a while, to some of you who are just coming to my corner for the first time, or you're just starting trading. And it doesn't happen only with trading, it happens with everything in life. Many people take what others say at face value and they turn it into some sort of doctrine, like it is the ultimate truth. And the reality is that unless you go out there and do the field research by yourself, and even so, you might do the wrong research. You might miss the benchmarks on your math and what you think your research was true because you did it might being might end up being entirely wrong, or it can evolve over time. So and we all need to be aware of that because a lot of what people hear as rules were never meant to be rules. They were context dependent advice, often from a very specific testing environment that didn't always come with enough guardrails for the listener, for you guys. So when someone with authority speaks competently, even carefully framed advice can turn into gospel, especially in trading where people are already looking for certainty. With a parenthesis, it's a certainty that we will never be able to attain, by the way. So I recently on Twitter I said that I was gonna stop talking about others. It's just like it really irks me how people speak, especially big follower accounts, because at the end of the day, they take the inexperience and the ignorant and they drive them to a cliff. And that's precisely my purpose here. That my whole reason for being is to teach and help people avoid that. Whether you like my ways or not, whether you like the way I talk, whether you like the things that I have researched over a decade or not, that's my goal. My goal is not to gain followers. My goal is not to make money from followers because an influencer and I being paid by anyone else. I mean, nothing at all. I mean, the only payment advertising that I have is just the fees from the exchanges that I share, because ultimately it's going to bring better features to you. But I mean, it's not that I make money with the follower count. I'm just run the academy and hopefully can uh, people can enroll, learn something that it's going to be useful for their trading journey and their life. And that's it. And there are very many of these accounts that are just clickbaits. They just sell ads and ads and ads. They have 5,000, a million followers, and they capitalize from that. But they don't really care about sharing bad advice. So whether people share good or bad advice, that's for you to find out. And but we need to be careful because that certainty is not there. So when you see someone, for example, saying Bitcoin will be $105,000 in the next 2 weeks, the bottom will be 50K in October or 38K in October, they don't know. There's no way to know. There's no way to prove that. I mean, the future, from a one point of view, the future is uncertain. There's no way for us to know what will happen. So if you set up your mind to a single idea, you develop bias. And if you develop bias, it's going to be impossible for you to make the right steps when things go south. How are you going to take profit? Are you going to cut a loss earlier than needed? So it's important because of that. And so whenever you see someone talking about certainty in the markets, then you know one of two things. One, the person doesn't know at all what he's talking about, or two, they don't mean well to you. It's just clickbait. It's just hopium. It's just fear. It's just all of the things that I tell you all the time to stay away from. So it's important to understand all that. It's frame advice can turn into gospel, like I said. That dynamic is bigger than me, but I'm not exempt from it. There was a period where I fixated heavily on trend lines, for example, or studying every day the influence of the solar storm for 2 years. I did that between 2016 and 2018. I literally went to the observatories in Russia, Australia, and United States, and I was tracking the data of the sun minute by minute, 18 hours a day, to see if there was an actual correlation between the solar storms and Bitcoin. So better readings, more efficiency, pushing the envelope. That's what I do every single day. I mean, I just sit here and, I always try to avoid getting too much or too deep into news or headlines or Twitter or other people's ideas. That's what I call noise, and I block that at all times. So I'm either in the chat with you guys discussing ideas or I'm researching, trying to optimize systems, trying to find new ways to look at the chart. That's just what I do all day. So, and to be fair, that fixation comes from real observation, and that's why do what I do with all these tools. So I realized that at some point recently that what I was chasing weren't numbers or certainty, it was understanding. Indicators are just simply the most measurable proxy that we can have to understand the chart and to understand what's happening. But then there's the other part of the equation. Technical analysis is a tool is not a goal. So I'm going to repeat that. Technical analysis is a tool, not a goal. And sometimes more isn't always better, it's just more. And believe me, trading has a way of humbling you when you forget that. And at some point, I had to confront something uncomfortable. If complicated charts were always better, why wasn't finding more success on charts that were objectively less complicated? So basically, that question doesn't fit the framework that most people use. And when reality doesn't fit your framework, you basically have two options. You either force the data to comply or you tear down that framework. And that's where things like waves and particles cycles came from. They were not a prescription, not as a right way to chart, not as a replacement of dogma. It was just a way of asking a different question. What happens when you stop chasing certainty and you start chasing experience? I wanted to understand. The reason I created waves and particles is it was just an exercise of observation. I truly wanted to understand on the deepest core of the chart why it moves the way it moves. And rather than put me in a direction like I'm gonna learn this indicator to make money, I sat down and tried to understand the chart and the reason it moves in the way it moves. It's like when you're sitting down with your girlfriend or your boyfriend and they're telling you their problem and you're just hearing what they're saying, but you're not truly listening. So that's the difference. Basically, when you look at the chart, you can either try to guess what's going to happen in the future in order to make money, or you can try to understand what the chart is telling you. So those are two very different things. So to know what's going to happen in the future, it was never the goal. To know what's going to happen in the future was never the goal. Letting go of the obsession with technical analysis was. Because, okay, because that misses the point entirely. If one line on the chart becomes doctrine, if Ichimoku becomes doctrine, then, uh, then I have failed to communicate the lesson because the lesson was never what indicator to use or not to use. It was how tightly to hold your conclusions. That looks like a contradiction sometimes, but what it actually is just a simplification. So I want you to take these words and truly, truly think about them in your future as traders or investors. If you really want to commit and you want to shift your mindset and you want to become a good trader. So if a newer technique replaces an older one, it doesn't mean that the old one was stupid. It just means that perhaps the problems changed. And more importantly, it means that you or I are learning something new. It's the same story with volume, candlestick patterns, and there's an uncomfortable truth to that. Anytime someone speaks confidently, people will turn what they say into rules. And this is something I talk about to students every single time. I tell them, hey, listen, one plus one, most of the time is two. So we need to pay attention to that. And then they come weeks or months down the road and they said, like, so Joe, remind me, one plus one is always going to be two, right? No, trading and charting doesn't work like that. So anytime, like I said, anytime someone speaks confidently, people will turn what they say into rules. Not because they're dumb and not because they're lazy, because certainty always feels safe. And when I speak with confidence, even when I say it's contextual, that certainty is what sticks into people's mind. That's why I only try to speak with facts, proven data. If there is a pattern here, if this. I fixate on one variable. Thank you, ADHD. At least I learned something real from it. So sometimes an idea from a person doesn't work in the current context. That doesn't mean the idea was wrong. It just means it wasn't universal. It doesn't mean people are misleading you. It just means that we are learning together. So these these things in reality are heroes or villains. No matter how much we want to celebrate them or damn them, they're lenses. And trading punishes singular thinking. Let's say that again. Trading punishes singular thinking. The moment you believe you found the answer, you stop listening. You stop listening to the candles, to your or preferences, or to new information altogether. So if you're watching this hoping for rules, I don't really have anyone for you. What I do have is a framework for thinking, testing, and changing your mind without ego, in humbleness, with observation, dedication, patience, and discipline. I know that sounds funny, but I mean, that's what I'm really trying to teach every single day. And yes, that means that probably I can contradict myself many times in the future, not because I was lying here right now today, but because learning is iterative. Even my own advice is just that advice. Not rules, not doctrine, and not immune to revisions. If that makes trading feel less certain, good. That's actually where it gets interesting. What all this means is that we are growing together. I believe that there are a lot of things that I've said that have been helpful to many, and a lot of people don't care for the things that I've said in the past or today, and that's absolutely valid as well. You can take what you want and you can discard what you don't want, but everything that I'm putting in front of you has been highly tested with a lot of data acquisition, with a lot of thought. I never ever put anything out there flippantly. Whereas I mean, I avoid it at all costs because I know my words have weighed on some of the decisions that people might have. So, I mean, I never script any videos, any class, any teaching, never, ever. So it's just the theories that I'm working on every single day. So all the testing is real and it takes a lot of time, an immense amount of time. That's why this video is different from most of the videos that I do. So I wanted to clarify those things so you can have a better framework on how to watch me going forward as I present you with new content, ideas, and tools. Because what I want to do is to create, elevate and grow the channel. I never did it. I never wanted to be honest. It's just a repository for the streams of the students. But I think there's a lot to be said. And I think there are a lot of things that I can, you know, teach people from my experience and my research so they can trade a little bit better. They can protect their money. I mean, these are crazy and very hard times, and it goes to say that a little bit of a guidance from someone that has been, looking and observing the scandal for such a long time. I mean, it can always help, right? So, what I want you to take from all of this is like whether you use Elliott Wave's Ichimoku volume profile, raw sentiment, whatever it is, whether you use a 50 MA or 200 MA, where you use Heikin-Nash candles, volume candles, where we measure time with a personal formula, or you use a specific parameter. Regardless of how you trade, chart, the only thing that matters is that you chart something that works for you today. That's all I want to. That's all I need to. So I'm going to move away from this and I'm going to hit you guys with the charts. Let me see how we are on the comments and the audio. Everything is good. So I'm going to talk about Ichimoku here because of that interaction that I had in the past week with this person. So back in 2015 was my first approach to Ichimoku. I saw it before from a friend who used to trade Forex, but I never paid much attention to it. But in 2015, I got back into it. And like every single person, I used to read the cloud as a very simple, straightforward indicator, something, the classic strategy.
Oh, Ichimoku, the cloud is green, is bullish. When the cloud is red, it's bearish. So above the green cloud, you buy. Below the set cloud, you sell. And that was it, to be honest, for a long time. I tried to play with it and mess with it and work all sorts of things with it. And but like I said, one thing is to look at it trying to make money, and another, a very different thing, is try to understand what the indicator is telling you. So I'm going to tell you right now, most traders using Ichimoku today don't actually understand why these numbers exist or what they mean or how to use them. The first thing that we need to understand is that Ichimoku Kinkohio means equilibrium at a one glance in Japanese. That's what it means. That's all it is. So basically, whenever you are looking at Ichimoku, you are not looking just at another set of moving averages like most people, 99% of people, use them or do. What you are trying to measure or read with the combination of all of the 5 lines and the cloud are simply whether what you want to understand is to know if the chart is at equilibrium or not. Why? Because the chart basically is a sine wave. So where is my sine wave here? I know it is. There you go. It's a sine line. So this is the price over time. You just make it bolder. So you have a medium line, right? Which is the medium line. This is the line of equilibrium. And basically, what the chart does with the different amplitudes that it has, as you can see, it's just energy. So you have a bottom, and then you have a bull market, then you reach a top, then price goes down to the medium. If it finds balance there, it will go up another way. If it doesn't, then it will go down until it's exhausted. Then that's your bottom. And then the impulse from that bottom will take you to the next top. And then there will be exhaustion there. And then it'll go down. And that's going to repeat over and over and over forever ad infinitum. Whether this is 17K, 100K, 64K, it doesn't matter. Or whether this is 3K, 15K, or 40K or 30K or 60K. So it doesn't matter. It's always this never ends. This is energy in motion. Every single system in the universe, from physics, quantum physics, is just energy in motion. It never stops. You cannot create it, you cannot destroy it, you can only transform it. So what Ichimoku does is tells you whether the chart is at equilibrium with one simple look. It'll tell you whether if the chart is in exhaustion mode. Oh my God, I cannot say the word. It's exhausted, or it's going to tell you if the chart is in equilibrium. When the chart is here in the middle, is in equilibrium, so it's a fair fight between bulls and bears. So the chart is balanced. So it's to see whether you're going to reach one extreme or the other, but it's a balance, right? So that's what Ichimoku tells you. Oh. Okay, 1 second. Okay. So that's what Ichimoku tells you. So based on that, Hosoda, like I said many times before, he spent 30 years putting together the math behind Ichimoku, right? He started around the 1932, 1930s or something, and he published that for the first time in the 1960s. So this is a lifetime work, right? And the most important aspect of this indicator is that if you don't understand why the number 9 is the foundation of foundation, it's the spell is wrong here. Oh. Okay. If you don't understand why 9 is the foundation of the indicator, you don't truly understand Ichimoku. 9 is simply the base layer. I've been studying and using Ichimoku every single day since 2015 in live markets across multiple cycles. I have used it to call infinite amount of tops and bottoms and trends and movements in many different markets, but mainly Bitcoin and crypto, as you all know. Obviously, this is a video, it's going to be out to you, for you members of the Discord, it's going to be out to YouTube. I want people to truly, I want to set the parameter of what the numbers of Ichimoku mean, so we start using it in a better way and not having this problem when people are debating whether they have to double the settings or not. That's the whole purpose of this video. So obviously, if you want to know how to truly use Ichimoku and how to make the best of it, obviously, the Academy is your friend. I mean, you can enroll, you can learn all the secrets, and you can trade with it. Like a very, very few people can actually. Um, if you want different type of information, I will recommend at the end a couple people, probably 2 or 3 guys that I know are free. They have free content if you want to try that way. But yeah, the whole idea and the whole point is that you start using it better. So here's a problem that happens with Ichi. Give me 1 second. I think baby is crying. No, it's not crying. She's good. So here's a misconception. I'm going to put it here, and people go like 9 hours or days of the week. Then you get, I don't know, whatever, 26 is a Japanese month. And then 52 was 2 months or an entire year. I mean, there are several 2 months on an entire year. It's different. You will find different variations and so on. So the reasoning behind this person that came up with this idea was like, so if this was invented in the 1930s for Japanese markets and crypto is 24-hour and I double the settings, then I'm gonna have better signals and better read, and which is basically stupid. Why? Because in order to have a better read with Ichimoku by double settings, you will first need to understand how Ichimoku works. And you don't understand that if you don't understand the foundation of 9. You're just using it as a momentum average, and you're just doubling the momentum average, which is how people use it. But that's not the way to use it. Ichimoku has, just so you know, Ichimoku has wave theory, time theory, and price theory. So it I'm gonna tell you something that happened to me last week while doing the research for this video. This is so crazy that I asked ChatGPT. I mean, just to see what he had to say. So I was like, "Hey, GPT, tell me what are the original numbers for Ichimoku and where they come from." So ChatGPT thought for a little bit, and he said, so the original levels or numbers are 9, 26, 52, and they come from the trading hours in Japan and this and that. And I was like, you gotta be kidding me. This is not possible, the ChatGPT. And this is great. This is the first time that this ever happened to me. But you need to be very, very careful with AI information, because unless you're a scholar or you have the actual data to tell ChatGPT that he's wrong, you're going to take what AI is telling you at face value as a certainty. And I'm going to tell you, as a race, we're going down a very slippery slope because of AI. So I told ChatGPT, no, ChatGPT, you are actually wrong. You are repeating something that is not true. So take a look again and tell me what you find. So ChatGPT came back to me and he said, hey, Joe, you're totally right. I was wrong. This is my mistake. It is so common and widely known on blogs, on books, on articles, on papers, that for a moment I thought that those were the original numbers. That was the meaning for the original numbers. But you are absolutely right. They're not. So we started to talk a little bit about Ichimoku and the origins of it. So that explanation from the numbers and the hours and the days, it describes historical context, but it doesn't describe Hosoda's construction logic. That's how we get into Hosoda's time theory. And this is what you want to know. This is what you want to understand. So, just for those of you who don't know, Hosoda published and wrote 7 books in Japanese about Ichimoku. Only the first 3 or 4 were translated to German in the 90s. Subsequently, from that, they were translated to English. So it's rather recent in the scheme of trading in the Western world. So there have been many attempts to translate the remaining books, but it has been unsuccessful. Many years ago, I was actually working with a very small group of people, Polish people, from Poland. They were trying that supposedly this guy he got his hands on the original Japanese books, and he wanted to find some money to translate it, but he was great. He went crazy. He got really cocky. I was working closely with them for months, and initially they wanted 10K, they wanted 30K, then at the end they wanted like 130K. He became really crazy and arrogant and aggressive about it, and I was like, you know what, fuck that. I mean, good luck translating your books. So that's the problem with Ichimoku. The entire theory as Osoda saw it was never translated and in its entirety. So there are a lot of empty, data. There are a lot of voids and black holes when it comes to Ichimoku. But I'm gonna tell you right now this: in Hosoda's original time theory, 9 is called Isetsu. Isetsu. That means one structural time phase. So this is the unit. Number nine that you see here is a unit for Ichimoku. It doesn't have anything to do with dates or hours or whatever. So it's the number of completion, basically. So it is a wave count in math from mathematics, not from calendar math. So you might ask, why 9? Well, it's if you study math and physics, you will understand because mathematically 9 behaves as a closure. It's a constant in cyclic system. We have a 10-digit count numerical system from 0 to 9. So 9 closes that cycle and it repeats again. So any multiple, for example, any multiple of 9 reduces back to 9. 18, 8 plus 1 becomes 9, 27, 7 plus 2 equals 9, and so and so and so and so. So number 9 represents in physics and the universe the completion before the reset. That's why you get, for example, in Tondemark, that there's a very known indicator, TD, and TD has a number 9, and you see them repeat them on Twitter like, hey, we are in a TD9 candle, and it's because of the same reason. So a lot of mathematical systems in the universe use the 9 as a base cycle. So that's where the cycle ends, and then you reset the count. So that's what Hosoda found, and the importance of candles with the number 9 is simply 9 is one structural time phase. So market basically moves in phases, impulse and correction. In phases, impulse, correction, and expansion. 3 phases, 3 movements, 3 structures. And 3 times 3 equals 9. So Ichimoku is not a moving average crossover tool. Ichimoku shows you a time equilibrium architecture. The Tenkan measures short structural balance, and the other lines are going to show you different structural balances within a different time frame: medium, short, medium, and long term. And the cloud is projecting the equilibrium forward towards the future. So, in order to understand Ichimoku, you need to understand that there is an intrinsic value and play between time and price. And if you ignore time structure, you are using the system superficially. So where do the numbers come from? It's very simple. So for example, the second number that you have for Ichimoku is 17. which is nothing but 9 plus 9 equals 18. Then you subtract 1, and then you get 17. That's the second number in the sequence for Ichimoku. Then the second one is actually 26. 26 is the same thing. Is 3 times 9 equals 27. Then you subtract 1, and then you get 26. And so, and so, and so. The reason you do that for the Ichimoku sequence is because the subtraction removes the overlap when waves share a pivot. So let me repeat that. If you have a wave, an N wave, Ichimoku N wave, which is like this, and you start to count your candles, if you do 9 plus 9, then you get 18th, and you count your cycle at 18th, then you're going to have overlapping pivots on the wave count. So the way that Hosoda was able to fix that was just to subtract 1 to solve the problem of the overlapping pivots. That's where the sequence comes from, and that's why you get 9, 26. These numbers, they have nothing to do with days or months or years in the calendar mathematics. They have to do with a far deeper, more relevant structure, mathematical structure for the universe and everything that happens in it. So, like I said earlier, it is wave count mathematics. It's not calendar math. So I've applied this framework through crypto cycles, expansions, compressions, volatility, macro shifts. It works like a charm. It never fails when you understand the architecture. And it fails flat on its face when you treat it as an indicator settings. When you treat it as a momentum average, you have no idea what the meaning or reasoning for Ichimoku is if you're using it just as a moving average. So that's the thing about it. So, and for that reason, when you go online and you Google Ichimoku settings, you will find like 99% of the information out there on books, on written books, actually, from people who have no idea what they're talking about. Or like last week, this guy who told me on Twitter, he blocked me afterward, he says, Carp.com and CryptoCred said they have to double the settings because of the dates. I mean, when you repeat that concept, it's the most common question I get about Ichimoku, and I've been getting it for almost 10 years. Even for the students, even from my members, even from my followers, should I double my settings? Is so embedded in the crypto culture that is damaging everything related to the indicator. And instead of actually helping you, it's not doing anything to you. So in reality, no one teaches Ichimoku time theory correctly. Very, very few people. I know that I mentioned I was going to share a few names. So on YouTube, you have Kei, which he's probably the most knowledgeable person on Ichimoku. He's Japanese, has tons of videos on YouTube. Then you have one of the first persons that I started to study Ichimoku from on YouTube free too. His name is Chaos Trader. I think his name is Chaos Trader 96 or something like that on YouTube. And then more recently, you got Dr. Cat. I don't remember his handle. Is Dr. Cat on Twitter. You have no idea how smart this guy. This is a guy with a PhD. So he has been studying Ichimoku, and he has been writing these guides on everything related to Ichimoku that are easy to digest, and they are very clear on what it means. So if you really want to go down the rabbit hole, then you can do that. I don't particularly use waves or time theory for Ichimoku because I have my own system. So after studying Ichimoku and many other systems, I started to work on my own formulas, and that's how I created Waves and Particles. So Waves and Particles is a proprietary system, and I created my own formulas to predict and forecast time, price levels, and everything in between. I only use Ichimoku to understand the trend and to see whether the trend is at equilibrium or not. That's how I use Ichimoku. But for dates and waves and prices, I use Waves and Particles. So just so you know, most content online stops simply cloud crossovers and cloud breaks. That's it. So if you really want to learn more about how I use Ichimoku or the formulas, I welcome you to the Academy. Inside, we go into time structure, weight measurements, cycle projection, race architecture, everything you need to understand Ichimoku beyond a surface level explanations. I mean, I'm gonna obviously the link to the academy is in my bio on Twitter. It's gonna be there. It's gonna be on the YouTube. So I mean, I'm happy to tell you more about it. If you have show you something really quick here, the about the double settings. So let's say you use it like a breakout crossover cloud, and you're like, okay, above the Kumo, I buy. So let's say you buy this Kumo breakout here, right? Because the price, oh, Jesus Christ. Okay, the price is breaking the cloud and it's going above, and you're like, okay, this is the time to go. Oh, this is the time to buy, and you buy right there. And then if you follow theory, you are gonna close that position once we go back down below the Kumo. So in this case, that just happened here at 86K. So you're basically, I'm just gonna measure the expansion for that. So you took here very safely a 200% trade over the span of a couple years. So that's okay. Now, if you double the settings, which I don't even know if these are the double settings. I never used them before. Right? If you double the settings and you play by the same theory, right? You buy here because this is a Kumo breakout. This is where the price start to go. Obviously, you're not going to buy here because you're going to be scared because you don't know if the price is going to get rejection at the cloud. So there's likelihood you buy here. But let's say you bought here. Say you bought here, you will hold in this position. Let me change the color there. So orange. And then ultimately you sell when you're under the cloud. So we're not under the cloud yet. So you're still holding to your position. So right now, your position after 2 years is 54% up. Not only that, you rode all of these trading opportunities, impulses, short opportunities, impulse, short, impulse, short. You miss all of that action. Only that, but you still are holding to your position. You lost most of your profit from 126K down to 65K. You lost most of your profit. You're still in profit at 54%. Instead, with this, with the single option, with the original settings, if only if you're using cloud breakouts and you're not even analyzing wave theory or time theory or cycle theory, then you could have profit 200% for this trade. And right now, you're just coasting and waiting until the conditions are ideal again to buy. So it's a simple way to prove one against the other. Obviously, when you have an indicator, you can make it yours. But before you make it yours, you need to truly master and understand how it works, why it works the way it works, and the theory behind it. Otherwise, whereas you're thinking that you're extracting edge from a new indicator, you're just shooting yourself in the foot. So, one last thing I'm going to tell you. If you don't understand the number 9, you don't understand the system. And that's the real meaning of the original numbers for Ichimoku, 9, 26, and 52. So now you know where they come from and what Hosoda actually meant when he created or found them. Of course, there's a lot that I could talk more about it, but obviously, like I mentioned to you guys earlier, it is something for the members, for the students of the academy, where I teach the system in depth. But hopefully, this video can clarify a lot of questions and doubts when it comes to actually doubling the settings or using the original settings. So, and to correct every single person and big influencer out there saying that you should double the settings, then you can show them this video, because the settings have nothing to do with trading hours, trading days, trading weeks, or whatever it is. It's just a mathematical sequence. It's not a calendar numerical sequence. So do your ultimately try it. Do it by yourself. I mean, you can go to the 1 minute chart, pull up the two clouds, the regular settings and the double one, and try to see the Kuma breakouts. When the price is above the green, which is bullish, and when the cloud is below red when it's bearish, try to compare them and see which one works best to you. Because what people in crypto think is that by doubling the settings, you get less noise. But of course, you're getting less noise. It's like changing your MA from 100 to 200. One is softer than the other. But in reality, with Ichimoku, when you do that and you don't understand or use the indicator properly, you're not softening the curve to get better signals or easier, more straightforward signals. What you're doing is you're using the indicator as another momentum average. You're fucking up your entries and your signals, and you don't understand what the entire indicator was built for, which is for you to see whether the price is at balance or not. Actually, the top I call it 125K was because of Ichimoku. In the past, I used to tell students, yeah, Ichimoku sucks at the bottoms and the tops because it always looks beautiful at the top and always looks awful at the bottom. But it's actually not true. As I keep on my research and I keep using it, I started to understand when and where Ichimoku is giving you signals. And this top right here, that's why I told everyone in September and October over and over and over. 122K, 122K, we're not going to break that. That's going to be a local top. I don't know if it's going to be the top or if it's going to be just a small wave top for a small correction, but we're not going to break that. And it's simply because on the lower time frames, and even here on the weekly, Ichimoku was telling you, hey, listen, you know what? We are at the highest part of the sign of the sine wave. So we are about to go down back to the medium. And that's what the price is doing right now. You can see here, like I tell you all the time on Twitter, you can see how far the Chiku is from the price action. And I know for a fact, I can tell you right now with certainty that this price is not going to trend upwards until that Chiku has a chance to break above the price again. So either it goes up and then maybe down and then up and then starts trending like that. It goes up from here like so. Or the other option is like it keeps moving sideways forever until it breaks the price. The other option is that it keeps going down until eventually at one point it matches the price and we can start thinking about a new momentum, a new bull trend, a new impulse, or whatever. So this is the beauty of Ichimoku. It tells you how things are going to be in time. That's why I'm able to be patient. I'm always like, hey, go with the flow, relax, don't trade this week, don't even bother about buying incessantly, gambling your money away to 100x, thinking this is the bottom because it's not going to be. I mean, trading, and I found as a coach for almost 8 years, everything in life is extremely simple and easy. Life is as easy. You have no idea how easy life is in trading and everything that you do, as long as you don't complicate things. We have this crazy, absurd, ridiculous ability to complicate every single thing with it. I mean, with an indicator, you see there's a beautiful indicator. Someone spent 30 years putting it together. And then a guy comes and like, I wonder if crypto is 24 hours, if I double the settings, it's going to be better. So why complicate things? I mean, at least try to find out and study the origins of it. Try to master the original settings. And if then, only then, you find a way to make it better, you find a way to that showcases the future of the price action in a better way, then by all means go ahead and do. I did it with waves and particles. I mean, I started looking at some math and I started looking at some numbers and I started to look at some patterns just by mere observation. And I went ahead and created my own formula. And it's pretty damn accurate when it comes to dates to the future. I can figure out important dates, weeks, months, and even years on the road. And it simply works every single time. I mean, but again, the only reason I did that is because I took the time to research and study and tried and tried and tried and tried and tried and master the indicator in order to go like, hey, how can I make this better? So I'm gonna take a couple of questions from the students because this is live on the Discord. Um, not related to what Doge or Farcoin or ETH is going to do, but probably to the indicator. I got a few of them on Twitter too. So yeah, DD, I know you use a double cloud all the time, but you don't need it. It's just that's unnecessary. Again, you're just complicating the system. I mean, by doing half of the cloud, double the cloud, I mean, it's not needed. I mean, you're just trying to you're what you're trying to do is that psychologically you're trying to find certainty and what you're looking on the first cloud with the second cloud. So I mean, yeah, I mean, if it serves you the purpose to keep you sane or to keep you quiet or to keep you stress free, then that's fine. That's totally fine. But in reality, you don't need the double cloud. I mean, the single one is going to tell you everything that you need to know. So, does anyone have a question for me or not? I think we're going to. No, I won't do that. Yes. How many people were here? Okay. DD is the same. I know what you're trying to say, but what you're telling me is like if you take two and you divide it by two, you're gonna get one. So it's another way of saying that one plus one equals two. Just it's a different way to look at it, but it's the same information. That's what I'm trying to say visually. It can help you visually if it's the way because we're come from different realities, backgrounds. We some of us are colorblind, some of us are perfectly 20/20 vision or 18/20 vision or whatever. For some, you see, that's the key word you're using, confluence. That confluence is not needed because you're just repeating the same information with a different view. Of course it is. Of course you can see it. Of course you can see it because it's telling you the price levels in the past. You just don't know how to look at them with the regular cloud yet. The the price is not hanging here randomly on an invisible line. If you truly understand Ichimoku on the single second, you will find why Ichimoku it's finding ground here. Why the price is finding ground here when the regular settings for Ichimoku. It's the same information, like I said. When the Kumo gets bigger, it's stronger. The momentum is stronger. So if you have a thin cloud here, like so, the momentum is bullish because both lines are pointing upwards, but it's kind of building up that moment. Once that cloud gets fat, you know there's a strong momentum and you know there's going to be a strong support level. Actually, you can see it right here. I know that this level, look at this, is, I mean, I'm not lying. It's easy as that. You can see there, that cloud right there, you can see that bounce right there. It's just because that the momentum and the price got really strong there. The same thing happens in the opposite direction. I think we can go to maybe the daily and see that here. So you can see the cloud was rather thin in this jump, and then it became fat here. So this was a strong. There was a strong momentum. There was a strong accumulation right there. You can see it or distribution. So you know that in the future that area is going to be problematic for the price action. So the wider the Kumo gets, the stronger the momentum gets. That's what it is. Okay, Didi, it's okay. Whatever works for you, it's what you must follow. When the Chico is far indicates and getting back what does indicates. Yeah, that's what the Kumo indicates. So another thing that I can share, but I've said this many times on Twitter and on the streams, public streams, is that when the lines are traveling together, the momentum is strong. When the lines get away from each other, I mean the Tenkan and the Kijun, the red and the blue ones, that means there's a lack of equilibrium, and the price is going to try to find that equilibrium no matter what. So, for example, here there's a lack of equilibrium. You can see the Kijun is flat, the Tenkan is flat, and the price is down here. So there's a visual clear lack of equilibrium there. So price needs to regain that equilibrium again. It needs to go back to the medium line. So in order to do that, two things are going to happen. Two options. We have two scenarios. Either we keep moving sideways until that Kijun has a chance to go down and meet the Tenkan right there, or the is that price goes up and it touches that Tenkan. Once it breaks that Tenkan and it touches that Kijun, then price will be at equilibrium again, and then it can drop again, or maybe it can reaccumulate and then go up, or maybe that's a leg and then it goes into a deeper correction. But that's what it tells you. When the lines are together, like you see here, for example, here it was get out of the market for everyone. Basically 105K was like, get hell out of the market. The Tenkan and the Kijun were both pointing down very strong. So that means the bear momentum is super strong. Bears are in total control. And that's it. So right now, when you see those lines traveling like that, the same thing happened in October 2024. You can see that both of them pointing upwards, traveling together. I mean, what follows next is a strong momentum. It's you have no idea how amazing Ichimoku is. There's no indicator that comes close to it. And when the Kumo is wider, does it show lack of equilibrium too? No, it just means the momentum is strong in terms of the Kumo. But yeah, of course, there's a lack of equilibrium because clearly there's a fight between bulls and bears. So when the bulls and bears are fighting, that means there's equilibrium somehow, but also they're building momentum for the next one, for the next move. Can you touch? Can you touch on Chiku tracing? That's a little bit more advanced. It's more a little bit more of, you know, Dr. Cat has a great guide for that. If you want to, if you fancy reading about it, because I don't do it. I mean, like I said, most of 90% of my analysis comes from waves and particles. Only 10% come from Ichimoku. And what I used to do is just to find confluence for what waves and particles is telling me and the trend lines and the trend and the state of the trend. For example, if I go here to the 3 month chart, I can see that on the 3 month, Bitcoin is still at a bull trend. You can see it right there. So I can go to BLX, for example, and you can see it right there. This candle is not going to close yet. It's going to close probably what? 3 month. I don't. Let's see another chart. This one. Okay. So you can see that everything here is on a bull trend still. You see? Kumo getting wider actually. Price had a correction, is touching the Kijun right now. Yes, it can go below, as you can see. It can do that during bull trends. It's usually, what these are basically liquidations. These are capitulation events in order to shake out people before the big moves. So until, for example, here on the 3 month, until these turns flat and turns red and the price is under a Tenkan and the Kijun and Tenkan and the Kijun red, I mean, this is not a bear market on the big scheme of things. It's still, trending on a regular bull structure. So, all right. So, guys, thank you very much for joining me and being here with me today. I really appreciate your company and everything that you have um, asked. I truly hope this helps you understand the indicator a little bit better, and this settles at least to some of you. Like I said, some of you are going to listen, some of you won't, but it doesn't matter. What matters are those of you that get the curiosity spark, ignited by this information. So the academy is open if you want to enroll in the to learn the waves and particle system. We have an amazing community. We trade together, we grow together, we are learning every single day together. I mean, we're a band of brothers over there, a bunch of samurais making money and having fun. I'm happy to welcome you. If you look at this video, you can send me a DM on Twitter. Happy to drop a discount code if you want to join the academy. If you want to join the masterclass on Ichimoku, happy to do that as well. But I strongly suggest to get the waves and particles. Um, course. And yeah, I mean, if you have any questions, you want to go deeper into these ideas or something like that, just see me up on Twitter. I'm happy. I'm always more than happy to help, guide, answer questions, debate, fight, whatever it is. Um, I remember there was a time back in 2016, 2017, I was fighting a lot with Carb Nakan on Twitter because I was telling him, don't use the double settings. That doesn't make any sense. But I mean, at some point, he was like, I don't care what you say. I'm just going to use my double settings. And that's it. And I was like, okay, brother. I mean, if they work for you, that's totally fine. That's the most important aspect of it. But then I said, I'm done with that discussion. But it keeps popping over and over. And it pains me when you see people taking what others have said as gospel when it's not based on truth or facts. So that's why I wanted to make this video, to bring those facts about Ichimoku and Hosoda to the forefront, so you have at least an extra set of information in order to make your decision to whether you're going to use the single settings or the double settings. So thank you all for coming here. Love you all as usual. Take care. Don't get wrecked. Let's stay patient. The market it's gonna turn around when it's ready to turn around, and we're gonna be there to make money off of it. So I'm gonna upload this to YouTube, and let's see. Let's see if we start to put more videos out in this same fashion, so we can keep learning together. All right. Take care. See you around.